We start off tonight in Greece, a country really putting in some effort to get its finances back on track.
You are right there, Laura. Greece says it is preparing an historic return to international debt markets. It's widely expected to sell 5-year bonds to raise around €2 billion as soon as Thursday. It's been 4 years since the Greek government last ventured into the bond markets. In between, Greece has had to rely on 2 bailout programs from the European Union and the International Monetary Fund. But even as the planned bond sale marks a turning point in the Greek recovery, there's still a long road ahead for the economy there. Delano de Souza has more.
A nationwide anti-austerity protest brought Greece to a standstill on Wednesday. Protesters are increasingly frustrated that their lives aren't improving in spite of economic conditions picking up. The latest demonstration comes on the eve of Greece issuing its first bond in 4 years.
What they say about growth and returning to the markets, for us, the employees, it will not bring anything new. We don't trust this, and we don't have any hopes.
Greece has been kept afloat with a €218 billion bailout package from the EU and IMF. And in spite of the country's return to the international bond markets, the Greek economy remains fragile. Unemployment remains stubbornly high at around 28%. Newly released data indicates that after 6 years in recession, the economy could be turning a corner. Industrial production for February was up 1.7% versus last year, up for the third straight month. But economists warn it'll take time to turn fledgling growth into jobs.
Unemployment is a lagging indicator. So you don't expect to see unemployment to go down at the beginning of a new growing cycle. You expect the economy to grow, and then new jobs will be created, and finally unemployment will be lower, maybe 2.5 years ahead of now.
Unions say their anti-austerity message was also being aimed at German Chancellor Angela Merkel. She's expected to visit the country's prime minister on Friday.
Japanese carmaker Toyota has suffered another recall blow. The company says it's recalling 6.4 million vehicles altogether. The recall affects nearly 30 different models manufactured as far back as 2004 and sold around the world. They're being called back to fix a variety of problems, but Toyota says there have been no reported injuries or crashes in connection to these problems. The recall follows a $1.2 billion settlement between Toyota and the US government. This as American officials accuse the car giant of making deceptive statements in connection to a previous giant recall. We're going to be taking a look at the stock markets next. And over in the United States, we're seeing stocks trading to the upside this session. Investors, they are digesting the minutes from the Federal Reserve latest policy-setting meeting. It appears that investors liked what they heard from that meeting, because we've actually seen stocks performing a little bit of a pop ever since those minutes were released. This as the minutes suggest that the Federal Reserve will keep tapering its stimulus measures of the US economy gradually. Fed officials also say at the same time that interest rates are set to stay low for some time still in order to support the US economy. We're also seeing some better than expected results from the aluminium maker Alcoa, boosting shares stateside this session. Those Alcoa results also resulted in some upwards pointing arrows in Europe at the close. The London FTSE 100 ended the session 0.7% in positive territory. The CAC 40 was up 0.4% at the close. Let's bring you some other news that we're keeping an eye on. The European Commission wants to introduce new rules on how top executives are paid. It's unveiled a draft law that would give shareholders a greater say on pay rises for bosses. EU Commissioner Michel Barnier says he wants a tighter link between salaries and how a firm performs. He says he's acting after some excessive pay packages that had left a bitter aftertaste in his mouth. Luxury group LVMH has reported an unexpected drop in wine and spirit sales in the first quarter. The company owns brands like Hennessy Cognac, which has seen sales take a hit during a crackdown on lavish spending in China. At the same time, LVMH says its flagship Louis Vuitton fashion brand had an excellent start to the year. Overall, first quarter sales grew 6% at LVMH to €7.2 billion, slightly above expectations. And there are more than 100 million users of Facebook in India. The social network says it's only the second country to achieve that milestone. And it cements India's position as Facebook's second biggest market worldwide after the United States. The company says it's eyeing further growth in India as growth in the West is set to taper gradually. A pretty impressive looking figure there from Facebook when it comes to the Indian market. And with that, I'm going to send it back to you, Laura.
Yeah, you always get big numbers from Facebook. I'm not sure about big profits, though.
Well, you know, so